there everyone, a very good morning and welcome to Buy Now Sell Now right here on ET Now. I'm Avan Dabash. A special day for us here in the office because everyone is celebrating our birthday. We turn 9 today and it's been memorable years and it's been a wonderful journey. Would like to thank all of our viewers for standing by. Well, in the meantime, the market's not really in celebratory mode. 10,819 on the index. You've got the broader end of the market, which is looking a little bit sluggish, particularly the small cap index, which is down almost 1% in trade. But let's keep you up to speed with the latest that's going on in the corporate world. In 2018 has seen a spate of abrupt auditor resignations in India Inc. and that's really spooked the markets. It seems to have raised a lot of questions as well when it comes to corporate governance. ET Now learns that the Ministry of Corporate Affairs has now kick-started a probe. This is on 42 entities which are under the lens. My colleague Vijay Iyer joins in with more exclusive details. Vijay, fill us in as to what exactly this regulatory probe entails.
As you're rightly pointing out, what we now gather is that the Ministry of Corporate Affairs has asked the Registrar of Companies of each region to try and compile a list of all the companies, particularly where auditors had abruptly resigned during the middle of their tenure. Now, what we gather is that the ROC Mumbai primarily is important because this is where the listed companies operate. There are 42 listed companies who are being probed now, and soon notices will be issued to these companies. Now, primarily asking them, why did the auditors resign? At what point of time did they resign? And what are the circumstances that they resigned? Because of lately, we are finding that auditors abruptly resign, citing some personal reason, and then things don't come out of actually what was the reason. So clearly, the larger probe, of course, involves the connivance between the management and auditors. Also, particularly some of the shell companies which have been under the radar the last 1.5 years. We all know already more than 2 lakh companies have been deregistered from the ROC books. So this is a part of that larger campaign that Ministry of Corporate Affairs is cracking down on shell companies. But this time, clearly, 42 companies in the listed space like the Gitanjali Gems, Atlanta, Karangi, and CG Corporate, and of course Hexaware Technologies are some of the names who are being probed. So clearly, Ministry of Corporate Affairs now focusing on the auditor's role, particularly in the listed company space and the companies which probably they feel are being used for shielding many of the shell companies. So this is an ongoing probe, but big step particularly on the listed space and the crackdown on auditors and the connivance that they have with this management.
Thanks very much, Vijay, for giving us those exclusive details. Gitanjali Gems, Hexaware, Vakrangi, Atlanta, those are some of the listed companies among the 42 that are under the MCA lens. And as Vijay said, this is an ongoing probe. Many thanks, Vijay, for joining in with the latest. Well, let's move on and get straight down to the markets. What should you be looking at and which stocks should you have on your radar? And we'll also be answering your queries. For just that, we have Manas Jaiswal on technicals and Gaurang Shah of Geojit Financial Services on the fundamental side. Well, good morning to both of you. Manas, I'm going to get started with some of your interesting recommendations. What exactly are you picking out today on the charts?
I have one buy and 2 sell recommendations right now. First is a buy on Bata because Bata was moving sideways for last, I think, 2 months in between 800 and 740. But it seems that stock is ready to give a breakout. So I would like to create a long position here at current levels. My stop loss should be 779 and target would be around 840. Second is a sell on NCC where the trend is negative. Stock is making lower tops and lower bottoms. It is trading below 200-day moving average, and today it has already broken the support of 103 on the daily charts. So I think the possibility is high that it can again test 95 rupees. So take a short call here and keep your stop loss above 105. And last one is a sell call on Torrent Power. I think last week we saw a lot of selling pressure on high levels in Torrent Power. Today it has already broken its 200-day, 100-day moving average with higher volume. So I think here you may see some more weakness. Here the target would be around 230. Stop loss should be 248.
Okay, there you have it, a solitary buy on Bata and 2 sells, NCC as well as Torrent Power. Gaurang, would like to get in your views on the equity markets today. We're celebrating 9 years at ET now, but the markets aren't in too much of a celebratory mode. And the general sense I get is that from a lot of experts that we're talking to is that this year is going to be one of consolidation and it's going to have a bit of a negative bias. There's so much news that's coming in that's not really been supportive. How have you read into the market movement so far, and what's the view going forward?
Well, thanks, Avan. Morning to you and all of you all. And first of all, congratulations for successfully completing 9 young years of existence. And I wish you, your team, and entire ET Now success and glory as you march ahead and keep on doing the good job that you guys are doing. And I especially am very, fortunate to be associated with this show itself. I believe, if I'm not mistaken, since the time this show was born, I am been associated with it. So I'm one of the fortunate ones to be associated with ET Now channel as well. On your question, as far as the markets are concerned, I think it's only prudent, Avan, that we see a little bit of consolidation. We've come a long way, and there are eventful data points which are likely to unfold in the near future for this calendar year 2018, as well as for the next first quarter or first half of 2019. And given the various state elections and the general elections, my sense is that it's only prudent that we consolidate. But again, as Ayesha and Tanveer were in discussion with Mr. Ramdev Agrawal, I think there are going to be plenty of opportunities to identify individual stock ideas. Market, Sensex and Nifty, if you ask me, 15 to 20% is the kind of expectation for the remainder of 2018 and the early first half of 2019. But stock specific, I think you can definitely make a lot more.
That's the view coming in on the markets, and of course our wonderful journey. And Gaurang, so glad to have you a part of it. Well, let's move right on and help our viewers out, something that we've been doing for years on end, and they've been sending us their questions and queries. We're going to get right to helping them out and helping them capitalize on their investments. Santosh first up has sent us an email, and he hails from New Delhi. He's bought 160 shares of Greenply, and he wants to know what the view is for the long and the short term. His buy price is about 330 rupees. Well, let's find out what the fundamental as well as the technical prospects hold for the company. Now, in terms of the results, it was a bit of a muted performance for the company. The profits declined about 20% plus. Gaurang, but brokerages have been turning quite positive on this one, talking about how we could see a little bit of a positive movement going forward in the stock. You could potentially see some market share loss, but nonetheless, the management has been fairly gung-ho. Our investor here is losing out quite considerably. What's your call?
Avan, first of all, I think Greenply is one of the great proxy plays with terms of infrastructure development that we are seeing in terms of real estate purely. Point number one. Point number two, after the implementation, two important pointers, in fact, GST and implementation of GST and demonetization. I think these two created an environment for the organized players to a great extent, wherein, especially after the implementation of GST in last July 2017, I beg your pardon, lot of unorganized players went off. Either they had to go off or come in line, and that's where organized players like Greenply got a fantastic opportunity. That's point number one. Point number two, I think the company has already gone under a major revamp in terms of business strategies. Third pointer, they have introduced a lot of newer products and innovative products with high-end launches and high-end margin. This would improve the overall earning visibility. And my sense is that this investor specifically, I think he bought in at about 330. The stock is trading at, I think, what, 240, 250. He's got about 160 shares. I would advise him to average either 100% or maybe more. That's primarily because it is, these lower levels that you are seeing right now from the acquisition price is a great opportunity to add to the stock. And being an organized player, management wise, I don't think there is any kind of a concern. And more importantly, with the new high-end product launches and more innovation, Greenply is likely to capture a larger market share. So you have a great new order market as well as you have a great replacement market. Hold on and average maybe 100% or more.
It looks like the overall view seems to be that it's one of the strong companies based on fundamentals. Greenply, then let's get to the charts, Manas, and how are you looking at this stock given the kind of movement that we've seen of late? And Gaurang was talking about averaging as well. Do you concur?
See, technically speaking, the structure is definitely weak because stock is making lower tops and lower bottoms. Stock is trading below 50-day and 200-day moving average, and still, I think on rallies, this is a sell on rallies stock because stock is trading below 50-day moving average, and stock has already broken the support of 260 on the long-term charts. So I think on rallies near to 260, 265, one should exit from the long position, and I think one should not create fresh long position till the stock is trading below 50-day moving average, which is placed near to 280 right now.
I hope you've taken note of the levels to watch out for on Greenply and how exactly you should position yourself in that stock. Next up, I believe we have a live caller with us, and it's a question coming in on Jindal SAW. Would like to get in the view for the long and the short haul. Do we have Sachin with us on the phone line? Yes, we do. Welcome to the show. And what's your query, Sachin, on Jindal SAW?
Yeah, I have bought a Jindal SAW at 133 levels.
Okay.
Anticipating that it will increase because of the metal were increasing. So I thought that this will also increase, and I will be getting my target was around 160, 170. That is almost a 20% premium. So, but it came down. So, what is the outlook of this? Whether should I book the loss and transfer that money to some other stocks? I want to know that.
So now he wants to know what he should do with Jindal SAW. 93 is where the stock is purchased. Remember, he's purchased 1,000 shares at 133. So he wants to know, is it the right time to book losses? Should he put his money in another stock, or maybe just ride the wave and be a little bit patient in this one? Well, let's dissect it then. What's next for Jindal SAW? Do you think that in terms of the kind of results that the company delivered, that it's on course, Gaurang, to deliver stronger returns? Because our investor here is losing almost 40,000 rupees. What's the correct approach? And if there are any other stocks that you would advise, which names would they be?
So Avan, he also mentioned that he was expecting a 20% return, and the current scenario is he is minus 28%. So you should have, first of all, risk reward profiling yourself in terms of how much risk you're wanting to take and how much of knock on your capital you're wanting to take. And unfortunately, I can't comment on Jindal SAW specific because we don't have a coverage. There is a compliance regulatory note on that. But I would advise, and he was willing to sell it and make a switch. Now this is what interests me. First of all, have a downside in terms of your capability of booking loss or how much of risk you want to take. My advice would be to maybe switch on to a metal name, and given the consolidation and a minor correction, if I have to identify one particular stock, then JSW Steel will be the one that I would recommend him. And my sense is that both cement and metal, on fallback of new infrastructure, airports, roads, expressways, freeways, modernization of existing infrastructure, metal and cement are going to look extremely outperforming sector. And in metal, JSW Steel would be the stock that I would advise him to switch.
Okay, hope you've taken note of that advice. What's the call on technicals then?
The stock is looking weak. It is making lower tops and lower bottoms. It has already broken the neckline of head and shoulder pattern, and possibility is very high that stock can go down and test 80 rupees or maybe 82 rupees. So on rallies near to 100 rupees or 105 rupees, I think one should exit from the long positions.
Okay, so it's a consensus call that this is not the stock to be in. JSW Steel is a preferred bet, and even on technicals, it's a sell. What about the wealth creation ideas, Gaurang? A quick word here.
So again, two investment ideas. First one is Raymond's. I think consistent performer. Long term, we have revised our targets to 1175. And I think it's one of the major textile players in India. Gone are the days when there was negativity in terms of dumping from China and Bangladesh. More launches in terms of high-end, mid-end will drive revenues. The second one is from the consumer discretionary space, if you will. This is an entertainment screen provider company called PVR. We have revised our targets to 1645, one of the largest players. Launches from the Hollywood, Bollywood would definitely have more footprints going through, and revenues from food, beverages and advertisement is looking quite stronger. The management has also laid down a business strategy in terms of increasing the number of screens to create a larger presence in the sector.
All right, hope you've taken note of those wealth creation picks that Gaurang has handpicked. On that note, thanks gentlemen for joining in and giving us a view on your ideas as well as sharing with us advice on your individual picks. We're completely out of time. We'll come right back with Market Fatafat.